And the halving creates this impetus for price to rise. People FOMO in, and we get above fair value. I don't think the cyclicality is gone. I don't think this is number go up in a straight line. I think we're going to have peaks and we're going to have troughs. And for a while, we're going to make higher highs and higher lows. That's called accumulation, right? So there's going to be an accumulation over the next year or so. So you can see this happening day in, day out. And I think that's going to continue to happen. And to your point, as the total asset base gets bigger, the ability for the big institutions to put big shorts on to push the price down so they can keep accumulating at a lower price. Absolutely.
With Bitcoin halving just around the corner, investors have been anticipating how the asset will perform afterward. Some predict that Bitcoin will rapidly skyrocket due to the hype, while others predict that it will have its final bull run before crashing, as nearly everybody will sell. Given all these speculations, Morgan Creek Capital CEO Mark Yusko has given us a rundown on what he believes will happen to Bitcoin following the halving. Let us now view clips of the interview. While watching, please give this video a thumbs up, subscribe to the channel, and enable post notifications for more similar content. Make sure to stay until the end of the video, where Mark Yusko discusses the speculation that Bitcoin's upcoming bull run will be its last. We hope you enjoy it.
4-year cycle, I believe, is baked in because it's hard-coded around the halving. And the halving creates this impetus for price to rise. People FOMO in, and we get above fair value. Inevitably, an asset either stays at above fair value and grows into it. Now that's certainly possible. I don't think the cyclicality is gone. I don't think this is number go up in a straight line. I think we're going to have peaks and we're going to have troughs. And for a while, we're going to make higher highs and higher lows. That's called accumulation, right? So there's going to be an accumulation over the next year or so. Then when it gets too highly priced, there'll be distribution. The smart money, the people who bought early, or some of the whales, will start to distribute to the masses. And then when it falls, they buy back. It's happening right now, right? You can see it on certain days, right? Yeah. We gap down 10% right before the end of the day. Well, why? Well, ETFs can only trade for a very small window at the end of the day. They strike their NAV actually at 359 every day. And here's the crazy thing. All of the gains in the Bitcoin ETF occurred after hours. There's been zero price increase during the day from 9:30 to 4 every day for the last 3 months. No price increase. All of the price increase has occurred after hours. Well, why is that? Well, because again, if you have to buy a bunch of something, the oldest trick in the book, you don't actually start buying it. You actually sell it first. You actually might short it. You actually might spread rumors that it's a bad thing. So you can see this happening day in, day out. And I think that's going to continue to happen. And to your point, as the total asset base gets bigger, the ability for the big institutions to put big shorts on to push the price down so they can keep accumulating at a lower price. For the long term, that's okay, because what that does is it creates a more liquid market, a deeper market. Now, they're kind of stealing, the institutions are kind of stealing from the moms and pops who are trying to speculate, but speculating is hard. And I'm much more of a buy and hold kind of person. Like, if I like an asset, I want to own it. And then I'm going to own different assets in a portfolio on a diversified basis. And I'm going to rebalance on occasion. Trading is hard. Speculating is hard. So I try to, and trading's really hard when you're going up against people with superior knowledge and resources and tools. Anyone trying to day trade stocks today, you're fighting Ken Griffin. There's no way you win, except on a very rare occasion like GameStop. But even then, it was a short-term win, because long-term, those guys are going to win.
Before we proceed with more insights from Mark Yusko, Here is another piece of the latest news. Steno Research predicts that the upcoming Bitcoin halving event, anticipated by many crypto traders, will follow the pattern of buy the rumor, sell the news, similar to the 2016 halving. This historical analysis suggests that while Bitcoin's value may surge leading up to the event, it could dip below its pre-halving price within the first 90 days afterward. The report highlights that Bitcoin's price remained below its pre-halving level for the entire 90 days following the 2016 halving, indicating potential parallels for the upcoming event. Despite the reduction in Bitcoin issuance post-halving, miners are expected to sell their Bitcoin to cover mining costs, contributing to sell-side pressure and price corrections. However, analysts believe that once this initial adjustment period passes and weak hands exit the market, the halving could serve as a bullish catalyst for Bitcoin's price. Additionally, while some expect short-term volatility post-halving, overall bullishness surrounding the event could drive interest and growth in the wider Web3 ecosystem. Let's now return to Mark Yusko as he discusses Bitcoin's upcoming bull run and whether it will be its last.
Is it the last big increase, like multiples? Kinda. And if you think about it, look, when it went from 0.003 cents to $1,
Yeah.
that was a miracle, right? That was the miracle of Bitcoin. That it survived like the startup phase, the science experiment. Getting to $1 was the miracle.
Right.
Then running from $1
the
to
birth.
$10, that's amazing. 10 times your money. But then it fell 80%. Then it went from $2 to 300. Oh my gosh, 150 times. And then it fell to like 186 or something. Then it went to 1,000. And then it went back down to 200. And then it went to 20,000. And then it went back to 3,000. So
Yep.
going from 1,000 to 20,000, just math, right? 20,000 20 times is a lot harder than 1,000 to 20,000.
Right.
And so from 68,000 to go up tenfold, I think it will happen, but it's going to take much longer.
It won't be in this. Yeah. Right. Right.
It's going to take
So
much longer. And look, people ask all the time, well, what's the ultimate end game? Well, let's just think about this. Bitcoin today is digital gold. Now, Michael Saylor wants you to say it's digital property. Ultimately, I believe that, right?
Okay,
Today, it's
yeah.
digital gold. What is gold? Gold is money. Money is an asset that exists in the absence of a liability. Total, and this is where people make a mistake. They say, well, total market cap of gold is 12 trillion. So the equity market cap, we're going up 10x from here. Half of that gold doesn't count. It's jewelry and chalices and gold leaf on the Golden Dome, back there at Notre Dame. So no. So 6 trillion, that's 5x from here, in the bank. Making 5 times your money from here, in the bank. You can call me on it. Okay, so that's like 400K. Easy. I mean, like super easy. Fine. Okay, but then beyond that, digital property. Now, digital property, real estate, is about an $86 trillion global asset class. Is it possible that Bitcoin is a better form of property? Like, think about it. The American dream post-World War II was what? Everybody buys a house, white picket fence, we take a mortgage, and we, make a ton of money. You bought a place in California when you came back from the war for $5,000. It's millions of dollars today. Glorious. Okay, what is that? That's just currency devaluation. It's not that the thing got better, it's that the money got worse.
Right.
So if you put money into Bitcoin today and the money keeps getting worse, then it's going to go up. And that's why I say all the time, one Bitcoin's one Bitcoin. Will always be one Bitcoin. It'll be that 2-bedroom house. But the average person today feels priced out of the housing market, but they can own Bitcoin.
Meanwhile, Brad Garlinghouse, the CEO of Ripple, predicts that the total market capitalization of the cryptocurrency market will exceed $5 trillion this year. He attributes this expected growth to various macro factors, including the approval of the first US spot Bitcoin exchange-traded funds and the upcoming Bitcoin halving event. Garlinghouse highlights the impact of these factors on institutional investment and the overall supply-demand dynamics of the crypto market. He anticipates a doubling of the market cap by the end of the year, citing current market conditions. Despite recent regulatory challenges faced by Ripple and the crypto industry, Garlinghouse remains optimistic about positive regulatory developments in the United States, particularly with the upcoming elections. He expects increased clarity and accommodation for the crypto industry in US policy. Garlinghouse's bullish outlook is echoed by Marshall Beard, the COO of Gemini Exchange, who anticipates a rise in the Bitcoin price to $150,000 later this year. He attributes this expected surge to various factors, including increased adoption, regulatory developments, ETFs, the halving event, and supply constraints. What are your predictions for Bitcoin's performance after the upcoming halving event? Do you think it will rapidly skyrocket or face a significant downturn? Share your thoughts in the comments below. If you found today's video enlightening and want to stay ahead with more insights and updates on crypto and global finance, make sure to hit the like button, subscribe to our channel, and turn on post notifications. Your support greatly encourages us to continue providing in-depth content and discussions. Stay tuned for our next episode, where we'll uncover more about the fascinating developments in the cryptocurrency space. Until then, keep questioning, keep exploring, and most importantly, keep investing wisely. Thank you for watching, and we'll see you in the next video.